Hey everybody, welcome back to Break Free from Wall Street, the show where we help investors build wealth outside of Wall Street. I am really genuinely excited about this episode today because I think when most people think of investing, most general people, they think of, you know, ticker symbols, stocks, bonds, maybe some crypto, but there's this asset class that's older than stocks, probably by thousands of years. Yeah, I don't think that's an exaggeration. I think by thousands of years, that produces something that every human needs every single day, every month of the year. Our planet pretty heavily relies upon this industry, and most investors have never really considered owning, and that's farmland. So we're talking about farmland today, and we have, I think, the exact right person to teach us about it and help us get a glimpse into the world of farmland investing, and that is Rob Moore. Rob, thank you so much for being on the show. You are I believe, the general manager of AcreTrader. Is that right?
Yeah, that's correct. It's a pleasure to be here, Nick.
Yeah, really excited to have you. And again, just get a glimpse into your world. I for one don't really know too much about farmland investing, and I think a lot of our listeners are in that same boat. So I think just to start off, tell us about how you got involved in farmland investing. I feel like you've kind of almost got to grow up on a farm or grow up in a family that is already integrated in that business. So tell us how that works and how you came to be in that world.
Yeah, absolutely. And really quickly, for the sake of compliance, I'm gonna rip really quickly through a disclaimer from our end because we are working through a regulated broker dealer and want to make sure we're all above board. All information we provide on the podcast is for informational and educational purposes only, may not reflect the views of Proterra or AcreTrader. Comments should not be interpreted as recommendations to buy or sell and do not constitute financial advice, tax, or legal advice. Please always consult your personal professional advisors before making investment decisions. Any examples of past performance are not guarantees of future results, and we're not responsible for actions taken. In long and short, please be responsible for your personal finances. That said, I'm very, very excited to talk to you about ours and where we play in that potential portfolio build out for any individual. Personally, so somehow I got into this industry. I did not grow up on a farm family. As with the case with most Americans, I'm one generation removed from the farm. So, my grandmother grew up on a farm. I am sort of from or of the rural South. Both my parents are from Florida. All my kin is Georgia, Florida, Alabama, sort of that corner of the Southeast. But
Mm.
I was an Army brat. Moved around a lot as a kid. Was not directly associated with agriculture. When I first grew up, so I got out of college and was pretty wayward. I didn't really have a clear path to a professional career coming out of school. And so I almost on accident took a job on a farm in Arkansas. I had never been to Arkansas. I've now been a resident for over 15 years, but at the time when I graduated, I took a job on a farm in Arkansas because I wanted to learn something radically different. I wanted real exposure to the way that food is grown, the way that food is produced. And so I showed up. I had no experience. I made $14 a day every day, and I got free housing and lunch. But I just
Yeah.
sort of was working labor. I showed up and I said, I want to learn. I spent about a year and a half working directly on a farm. I was primarily on the livestock side, though we did have a fairly large produce side on that operation as well. Uh, and just completely fell in love with agriculture. I fell in love with the sort of the closeness to the source of what keeps us alive. And I think
Mhm.
that's a really radical or was a very radical experience for me. I then didn't really see a clean way to get in. As you mentioned, most folks that are farming at scale today grow up in that community. It's actually pretty hard, financially speaking, to become a farmer if you don't have generational assets and knowledge
Mm.
to transfer down. So I went on my way. I traveled for some time. I did some odd jobs, worked as a ski bum. I eventually landed working trash and recycling and built that into a financial career. So I began working on the finance side within the trash and recycling industry. And several years later, had the opportunity living here in Northwest Arkansas to come work for AcreTrader when the business was just starting to expand. For me, it was a really beautiful marriage of things I'm really passionate about. I really, really like sort of the structure and order and control aspect of financial analysis. I find that incredibly stimulating and enjoyable. And agriculture. So being able to marry those two passions was a, a real blessing, particularly in the region that I live in. I'm in the Midwest, or the I guess the northwestern corner of the Southeast. Grew up as the organization grew up. Took over as general manager about 2.5 years ago now. And then last year, myself and my partner, who's the director of investments here, Drew Lipke, took the company and sold it out of the parent company startup that founded it. And we were purchased by asset manager out of Minneapolis called Proterra, who is a very large agriculture only, vertically integrated all throughout agriculture, but an agricultural only asset manager. And we've been with them since last August, so almost exactly a year. Actually, we're less than a week away from a year of that anniversary.
Well, awesome. Congratulations. First of all, that's awesome. And that's crazy. So it was something that had an impact on you earlier when you were trying to figure things out, and then you just found your way back.
Yeah, I think if I'm being completely honest, I don't know that there's been a happier time in my life than when I woke up every day and my job was just to go out and take direct care of land. Right? Like I really don't, building fence and taking care of animals and plants is a really incredible way to live. It's also, to be really, really blunt, incredibly difficult and incredibly volatile. I cannot understand. It's funny because we're about to talk about farmland and land as an asset class, which is sort of the opposite. But the farming itself, that is a brutally difficult business. American farmers live an incredibly volatile existence. It's a very, very volatile industry as a farm producer because most variables are outside of your control. You don't control the weather. You don't control the commodity price. You don't control the cost of seed. You don't control the cost of inputs and fertilizer. You don't control the cost of fuel. So farmers have to balance a ton of different variables that are outside of their control. And then they have a few that are within their control, right? The way in which they're practice and implement, the way in which they plan, the way in which they handle their pricing. It's a finance job. It's an agronomy job. It's really, really hard. It's very, very volatile. Underneath that is the dirt itself, the soil on which we are producing the crop. And historically, that's been the opposite. That's been an incredibly stable, incredibly consistent, and honestly, pretty simple asset. So when I came in to AcreTrader, my first job was to work directly with farmers on the sourcing and underwriting side of our business. I just did not, I averaged on 100, 150 conversations a week, and all I did was speak directly to farmers. And when you think about the reality from a farmer's perspective, most of your costs are set. So if you buy a piece of equipment, right, the modern farmer is going to have quite literally often several $1 million worth of equipment value. They have a
Wow.
certain amount of staff or family that they are working with. They have, the seed, the fertilizer, all the different inputs they have. Those are all set costs. That allows a farmer to farm a certain number of acres. So let's say they have the equipment and staff and resources to farm 5,000 acres. Well, if they're only farming 3,000 acres, right, all of that delta between what they could operate on without updating equipment or increasing their scale and where they are is lost revenue. So almost every farmer in the United States, certainly row crop farmers, so these are crops that grow each year and then you're done. You start over from bare ground again. So corn, sugar beets, potatoes, onions, all vegetables, those are our row crops. The alternative would be permanent crops, so things that you plant and harvest every year tree. So your apples, your cherries, your almonds. We don't really work in permanent crops. Our focus is row crop. Almost every
Mm.
row crop farmer wants to farm the most amount of ground. Well, if the average cost of a piece of property in your region is $10,000, right, and you want to farm 5,000 acres, that's $50 million in asset value. You're not going to sink all of that money in the ground. All farmers own a portion of their operation and then lease a portion of their operation. So, what our business does is focus on going out and buying ground with groups of investors as a long-term investment, in direct partnership with a local farmer that wants to pick up more leased acreage so they can expand their business. They're then spreading that risk so they don't have that capital tied up in the land value and can operate on top of the farm. From the investor's standpoint, they're investing directly in United States agriculture via the most conservative side of that, which is the land itself. We don't use any leverage. It is fully focused on the long-term appreciation of the value of United States farm.
Okay. And that's what I was gonna ask because when you say investing in farmland, I want to make sure that I understood and that our viewers understood exactly what it is that you own. So you own the land that is going to appreciate because of the and we have a guest. We have a speaking of agriculture, speaking of animals.
Yeah.
No, so we you actually own the the land itself that appreciates because of the capability it has to produce, all of these different income, based assets like food and crops and all that. Is that accurate?
Yeah, so the way to think about it is as follows. Here in the United States, and we are incredibly blessed. I didn't even realize until I started working seriously in the industry how incredibly fortunate we are in the United States, both by the amount of land we have per capita and the quality that it has to produce the things that we grow. So most places in the world cannot grow the abundance of crops and the diversification of crops we can in the US, nor do they have as much ground related or in comparison to the amount of population they have. So we're really, really lucky here. And if you go back and look at a map of the United States, we have a ton of acreage we can grow on. The problem is, as our population has expanded over the last several hundred years, there's nowhere to build into except for farmland, right? So the economic thesis behind farmland is that we are losing it constantly. There's an old quote that is attributed to Mark Twain, though I believe historians don't actually have any evidence he said it, which is buy land, they're not making any more of it. So
Mhm.
in the United States, every time we build a new city, every time we build a strip mall, every time we build a new neighborhood, right? That's usually going on to what used to be farmland. What that aggregates to is in the United States today, we lose on average 4.8 acres of farmland a minute.
Oh my gosh. A minute?
A minute. And that is USDA data. That is over the course of the last several decades, we are averaging almost 5 acres a minute of
Okay,
loss.
and help me and maybe some people at home who aren't as familiar with the measurement of an acre. Like how big are we how big is 1 acre? So you said 4.8 acres,
Yes.
right, per minute?
Yes, that's right. So I guess the simplest way to think about it is an acre is about 75% of a football field.
Oh, wow. Okay.
So, right. So functionally, we are losing 3/4 of a football field every minute of farmable acreage in the United States.
Wow.
Now, that's wild, right? Just at a pure,
Yeah, that's crazy.
wow, that's crazy. So then let's take a step sideways and think about it from a supply demand standpoint. If you think about investing in most things, right, there is the ability to increase or decrease the supply of it. So, for instance, in real estate investing, real estate's a very common asset class that people want because it's a hard asset. It's something tangible, right? It's not
Right.
crypto that plays a different role in a portfolio. It's not a stock where a company can disappear. A piece of real estate's a piece of real estate. If you're investing in commercial real estate, well, okay, when the market's not good, we stop buying and building new commercial real estate, right? You can reduce the supply of commercial real estate. We're not renovating buildings. We are demoing areas. We're changing the use case of that land to fit the needs within the market. With residential, right? We don't have enough houses. We're building more houses. If we're oversupplied in houses, we stop building new houses. Farmland, we cannot make more of it. You can't say, hey, we need more farmland. Let's go build some more. And not only that, you can't really stop the progress, the human expansion of progress, right? Like that's not a reasonable thing to expect. Even if you, I mean, population hasn't been slowing in its growth particularly, but not only
Nope.
that, like it's not population based. You have an expanding global middle class, which is good. You have more wealth from more people. Well, those people are going to buy more things. They're going to want a house where they used to live in an apartment. They're going to want to live in an area that has more opportunities. Opportunities mean more infrastructure, more roads, more production, etc. As we expand as a world, we're doing that onto the resource that is bare land. So farmland is not the most aggressive investment thesis, right? I'm not out telling people I'm going to triple your money in 2 years. I'm not out there telling people to expect 20, 30% returns. However, The downside on farmland historically is really hard to find. So if you go back and
Mm,
look from 1997 to present, right? We have the dot-com bust, we have the '07, '08 financial crisis, we have the war in Ukraine, we have any number of smaller economic crises where stocks, certainly the last couple of years, stocks have gone up and up and up. But we know historically that's a cyclical marketplace. Farmland, when everything else tanks, it's historically been negatively correlated to equity. It's been positively correlated to inflation. So it typically is outperforming those other assets because even when the economy is poor, even when farmland values, the crop prices are down, ultimately the base need for that supply of ground to grow food isn't going anywhere, and the supply is constantly shrinking. No matter what else
mm,
happens, supply is shrinking. Historically, it's again, this is a capital preservation play. It's if you want to put your money somewhere where a, it's directly tied to a hard physical asset, and B, it's not going anywhere, right? The need for high quality farmland, it's pretty hard to imagine a world in which we do not need food, fuel, and fiber, right? Like we are wearing things that were grown on ground. We are driving cars that are filled in the United States. Almost always a percentage of that is ethanol, which we're growing on a farm. We are every day, all day consuming things that are grown on farms. It's just really tough to imagine a
mm.
world in which there's not value within that asset class. So it's been this long-term conservative stalwart within a portfolio, and it cash flows a little bit, right? I mean, there's a 2 to 4% cash on cash return, but the value is the ground itself.
That's super interesting. And you mentioned it being like a hedge against the traditional markets. What is it about farmland? I know we talked about how, I mean, the demand is always there. Is that also what's keeping it as like a like a hedge against inflation itself?
Yeah. So the way to think about it is historically, farmland values have increased when inflation increases, right? So if you have that positive correlation, if you're going to go out and say, okay, inflation's taking off, so the rate that I get at my bank is great, I'm going to put all my conservative money into whatever, 4 or 5% cash on cash return. The reason your interest rate is that high at the bank is to keep up with the exact same value of your money. So there's no gain there. You've preserved that value, but that's tracking with inflation. So ultimately, you're gaining no purchasing power. That's not an investment. That's a simple capital defense. I know $4 is still worth the same $4 by making it 4.50 or whatever that increase is, right? Farmland is increasing in value at that same period of time. So we talk a lot about, you got to be really careful when you think about capital preservation. I like to think about farmland more like gold with a coupon and inherent value. So if you look at performance, and this is a little bit harder to do just because of like gold went hyperbolic 12 months ago, right? So
Sure.
it's a little bit hard if you look at the graphs. We have a long-term graph where we do this on the website that you can see at AcreTrader.com anytime. There's a bunch of asset classes we map out, and gold obviously like spikes within the last 12 months.
Yeah.
Ignoring what's happened in the last 12 months, and because again, there's risks and return and all sorts of things there. It historically has been a similar role in a portfolio. It's a hard asset investment. It's backed by something physical. The difference is you can't eat gold. And ultimately, gold doesn't coupon. Gold is simply, it's just sitting there. The farmland, because of farmers using it, they're renting that ground and you get a coupon off of that rent. So we average about 2.5% on average on a cash on cash return on an annual basis. And so you're seeing that cash flow. But again, that's not the focus of the investment. The focus of the investment is the underlying real estate itself that historically has shown up pretty strong up and to the right over the last several decades.
Okay. So so yeah, I want to talk about returns. So the money is not only coming from the inherent value of the land, but also you mentioned you called it a coupon. The farmers are leasing or renting that land
Mhm.
to produce their products, and then on top of that, you're technically also just maintaining the value that inflates with just general economic inflation. So
Yeah.
when you're am I understanding that right?
Yeah, I think so. So the way to back it out a little bit, the annual return from the rent from the farmer, that's pure cash, right? So every year you're going to get 2 to 4%. handed to you. That's just cash. And that's not exposed to commodity prices. That's not exposed to, they're paying literally regardless of what's produced. So the security for the farmer comes through insurance. And here in the United States, we have a very, very large farmer insurance program. It's the Farm Bill, and heavily politicized and a huge deal right now in Congress. But ultimately, we subsidize insurance for the United States farmer because we believe that that's part of the security mechanism for our infrastructure as a country. So the farmer's paying rent regardless of what's produced. So that coupon comes in. Again, we have a joke here, like we don't do heartbeats, we don't do toilets, right? When you think about what risk you can put onto an investment, heartbeats and toilets are the easiest way to do. We don't invest in livestock, we don't invest in any structures. Because the land itself, you're getting that check regardless of what happens. Most of our farmers actually pay up front before they even plant the crop. They just, here's the rent check, we're done for the year. So that you're just getting, that's again, secure, low, but very secure, 2 to 4% cash. That farm is then, historically, it's appreciated in value. So if you take the average of 5.7, 5.8%, let's be conservative and say, so let's say you take $1 million and you say, I'm going to buy a farm. And for the sake of the argument, it appreciates at the historical average. In 5 years, that $1 million is one. So when the farm is then sold, you got your 2% return annually. That was nice. That was something to provide that return profile, but it's the 30% increase on your core capital that's driving the majority of that return. And if you think about that in financial analysis terms, we use typically IRR. We use internal rate of return because it's the worst for us, right? We like to be conservative, so we want something that discounts for time. Our IRRs are typically going to, as an asset class, average 6 to 9%. Our historical average is about 8. So again, 5.7% from appreciation historically, and then you tack on 2.5% from cash, an 8% blended annualized average.
Okay, that makes sense. Yeah, so come for that, that 2% up front and then stay long term for that, that overall appreciation of the property. I love that. And I'm assuming not every acre is, created equal. So what in your experience, or would you say, you know, separates genuinely like investment grade farmland from like land that's just not as good in a listing? What do you actually, or what should investors actually be checking for before you put a farm on the platform?
Yeah, that's a great question. And to be clear, most farms are not investment grade in our diligence mind, right? So that's a really great question. And to be clear, in farmland, it's really hard because two farms next door to each other are not going to be necessarily the same. There is massive variation on each individual farm. So first thing that we look at is at a really, really wide lens, regionally, what fits for our thesis. And to make sure that I'm not discounting anybody that does things differently than us. Each region has an investable thesis, right? There are people that are investing in agricultural land anywhere where there's agricultural land. At
Mhm.
AcreTrader, we're focused on a tight, narrow window within that, which we consider the most secure and conservative. So I don't want to invest in something that has the potential to triple your money, but also the potential to lose all of it. I want to
Mhm.
find an investment that most accurately fits the farmland thesis that this is a long-term capital preservation, security, and growth play. And we believe that that is best served in the higher quality ground in regions with a lot of agriculture. So we don't want, a fringe acai berry farm in Arizona, right? We want big farms in areas surrounded by big farms. We want a direct tie to that thesis. What we're looking for, one is a strong region. So we don't want regional risk. We want there to be a really strong multi-generational agricultural infrastructure. We want fertilizer suppliers. We want grain suppliers. We want people that can, navigate up and down the Mississippi River and move product. We want access to ports and export options. We want a really core ag region. We want the ground to be what we consider A or B quality as far as the type of soil, its ability to produce a strong crop, as well as the infrastructure. So does it have secure water? If you're irrigating a farm, you want to make sure you have secure water rights. Again, there's a riskier thesis that somebody else could argue is great, and that's fine. That's not our thesis. We want the most conservative. So we want senior water rights with secure access to water and really high quality soils. And the reason is because we want our standard deviation to be as tight as possible. So we spend a ton of time learning about how much the farm has produced previously. So what type of yields, how has the crop production been historically? What crops does it produce? We want core commodity crops, right? We want things that we know there's going to be a market for in not only 5 or 10 years, but in 100 years, right? We're not going to stop growing onions. We might stop eating as many acai berries. So we want to be right. We want to be, and
Yeah.
that happened actually. So yeah, I mean,
Yeah, it
there's
was
a
a
lot.
little bit of a fad.
Yeah, exactly. Yeah, we're not doing fad crops, right? We want something that is really core to our ecosystem because we believe that's the best place to have a secure investment land underneath it. Then we want to make sure that we're working with really, really good local farmers. I don't want to bring somebody from Arkansas and go farm in Illinois, right? I want somebody who's grown up in that community, that knows that area, that farms there already, that knows the ins and outs. Because at the end of the day, we're a data-based company. We do a ton of data work on making sure we buy at a really good price. We want to make sure we have all of the data behind. I want to see the soil scores. I want to see the slope. I'm going to do a bunch of analysis from a desktop. At the end of the day, there is no world in which me sitting at my desk in Arkansas, no matter how much experience I have, can know all of the variables necessary to accurately underwrite a farm. I need somebody that grew up in that community that can say, yeah, the soil score looks good there, but there's a huge rock pile at the bottom of that field and you can't till into it. Or, man, that's great, except for every time it gets really hot here after a rain, that soil hard pans and I can't crack into it and I lose a bunch of production. So it's a mix of big data. And we came out of a sort of ag tech startup community. Now we're in a more conservative asset management system, but we came up as an ag tech company. We had a ton of developers. We were looking at software and designing software to be able to analyze these parcels. And that gives us huge advantage. That gets us about 70% of the way there. You have to have that additional on the ground local knowledge. And we do that in layers. One layer is the farmer themselves, work directly with the farmer. The second is we have local farm managers. So we have people that have grown up in those communities that don't have a dog in the fight, that are just completely third party agronomists. Functionally, these are soil scientists and usually people that grew up in farm families and farm on the side that can go out and tell us what we're not seeing. It's a marriage of real local intergenerational agricultural knowledge and then big data and analysis. And we do that as well, because if I'm going to tell you the most important part of this investment is the appreciation of the land value, I better be damn sure I'm paying the right price for that farm. Right?
Right.
Like at a really core level,
Yeah.
entry price is going to drive something if I say the value increase is what matters. And that's where big data comes in. So the company that we rolled out of is acres.com. It is far and away the best private data set of land sales transaction data, verified land sales transaction data in the United States, period. And so we have access to a ton of data to then say, okay, this is a really great investment grade farm. Let's say in our pipeline, and to be clear, we underwrite less than 5% of the farms we look at. So I'm going to look at 100 farms. Our team is going to narrow that down. We may do deep diligence on 20. We may put offers on 15. We expect to buy 1 or 2.
Mhm.
And the reason for that is if the average price is an aggressive grade farm, that knocks out a bunch. Then you have, okay, here's all our good farms. Okay, if the average price of a farm is $10,000 an acre, right? And I have a fee load. I take a couple of percent up front. It's expensive to turn it into a security and bring investors in. So there's a fee load on that. Well, the investor doesn't care what your fees are. The investor cares if you're getting them a good deal fully loaded, right? Include your fees in the model. We put everything in Excel on the platform so you can actually see the model itself. For me, if it's $10,000 is market, I need to be buying at something like 8,500 or 9,000 an acre because I have to be able to put fees on it and still get you a discount. That's where I provide alpha and value to the investor.
Mm.
So it's a mixture of learning a lot about agricultural and soil and then combining that with really high level data analysis and modern technology to come say, hey, how do I make sure that it's a good buy, not just a good farm?
Wow. You just don't coming in from the outside, not knowing that much about farmland, you just don't realize the amount of variables, the amount of data that there could be, for an asset like this. It's so interesting to hear all the factors that you consider. You mentioned that you're looking for a specific, a specific cross section of a certain type of farm or farmland. Is there like different markets, areas of the country that are just like made for, the type of farmland that you're looking for? I guess if markets is even the right word, is there just like these hubs of different like, like prime farmland in the United States?
Yeah, there are markets that best fit our thesis. And again, I want to be really careful because, I am not smart enough to tell anybody from anywhere else in the country where you should and shouldn't invest or farm compared to somebody else's expertise. What I can say is our thesis and our expertise has led us to focus on a couple of core regions. And so on the most, again, we're the most conservative. We're looking for high quality and we're fully focused on that entry price and we want a lot of security around it. The regions that best fit that for us are the Mississippi Delta. That's great because we're in Arkansas. So, I mean, I drive there next week. I'll drive over and it takes me 3 or 4 hours to get there. We have a lot of our staff grew up here. So we have a lot of personal and family connections over there. Mississippi Delta is a excellent place. We do a lot of investing there, particularly Northeast Arkansas and Southeast Missouri. We do a lot in the Corn Belt, particularly the upper Corn Belt. So we invest a lot in Northern Illinois and Northwestern Indiana, some in Southern Minnesota, as well as Iowa. So that's all the Corn Belt. That's your traditional, just corn and soybeans, miles and miles and miles of the exact same thing. We
Hmm.
invest a lot in the Pacific Northwest. We like the Pacific Northwest for a couple of reasons. One, it is one of the few regions. So there's parts of the country where we don't need supplemental water. In the Corn Belt, the water comes from the sky. It's rain. There is no other water source. You don't need any. It rains a lot there, right? I mean, Chicago got 8 inches in like 12 hours a couple weeks ago. You go to
That's
the
crazy.
Pacific North, yeah, it's nuts. You go to the Pacific Northwest, you're in the desert. You're literally in high desert in central Washington, right? But you have the Columbia River, which is this massive river and we've been irrigating at it. It's highly regulated. We've been irrigating out of the Columbia River for hundreds of years now. Out in the Pacific Northwest, you have a really beautiful marriage of soft, sandy soils that drain really well and strong water access to irrigation water. So we grow carrots, we grow onions, we grow sugar beets, we grow obviously potatoes, as well as corn and alfalfa and all sorts of things like that. You also have access to the coast. So there's the export market via the Port of Seattle. That's an area we really, really like. Idaho, Washington, and Oregon. We invest the Central Valley of California. That is quite literally the most dense from a just production diversity standpoint, the most dense
Mhm.
and diverse place to grow food certainly in the US and maybe in the world. It is just unreal what the Central Valley of California is. There's different risk profiles associated with that. There's different water concerns with that. There's different competitive concerns. But while we're probably the most, our diligence list in California is much longer than some other regions. We really like it for right opportunity. And then the Southeast. So you talk about the eastern side, the Carolina coastal plains, the eastern side of North and South Carolina, Georgia, and the northern end of Florida. And then some areas that are tangential, central Nebraska around the Platte River, the Red River Valley in northwestern Minnesota, and northeastern Dakotas. But that's it. We've managed almost 50,000 acres to date. We've been in 20 states. Most of our work is in about 10.
That's incredible. Yeah, I spent a lot of time growing up in Central California, and I spent many an hours on a grape vineyard. So, and that
Really?
was just yeah, that was actually. I spent most of my time around grape vineyards, but I know even just driving through as a kid, just seeing those rows and rows and rows of crops, seeing the fruit stands. I mean, it was very apparent even as a kid that like wow, there's a lot going on here as far as agriculture goes. But that's awesome. And yeah, it's as you said, it's not like we're telling you where to invest, but as far as what you're looking for, what AcreTrader, that niche, I guess, in the type of farming that you're looking for, those are the areas. I want to get into kind of the I guess the trade-offs of getting into farmland. Just want to be transparent, make sure that we're going into this that investors are going into this with all the information. So what are the real downsides of farmland? I'm thinking about how easily you can get your money back out, the fees involved, and the fact that maybe not every deal wins. But can you give us a glimpse into what those trade offs are in farmland?
Yeah, absolutely. And there are absolutely trade offs. And I think trade off is a really, really good term to use there because the value is because of some of those trade offs. So in farmland, liquidity is number one. That's exactly what you just pointed out, right? This is real estate. You don't want to be a forced seller. I tell people all the time this should not be your rainy day money. This shouldn't be your like, hey, I need my money back tomorrow, right? It's not a liquid asset class, right? You don't want to be a forced seller. You don't want me to go sell your farm in 2 weeks. You want me to be really strategic and careful about when we sell that asset back in to maximize the value for you. We've made that a little bit easier. Our direct investment. So we do direct investing where you invest in one farm. We also have a fund where you invest in a huge basket of farms that grows. We did that in part to help solve that liquidity. So in a direct investment, they're fully illiquid. It's you own this for 5 to 10 years till the farm sells. In the fund, we have a 2-year lockup and then you have quarterly liquidity. But again, that takes time. If it's quarterly liquidity and a 90-day redemption, that means it takes 6 months to get your money back. So illiquidity is absolutely a key aspect of this asset class and this investment strategy. There are a couple of publicly traded farmland REITs. So you can go on the stock market and invest in farmland. The problem is equities do not historically track with the underlying land value, they track with equities. And this isn't a knock on any of those REITs. There's a place for them. However, if you look at the value of that ticker over time, it doesn't correlate to actual farmland values. So to invest actually directly into farmland and get the benefit that that investment gives, it's going to be largely illiquid. That's actually one of the reasons that it fits really well into an IRA, because that's typically not money that you're sitting and looking, hey, oh my gosh, I got to buy
Right.
a car. My engine just blew up. You're not going to go to your IRA for that, which makes it a really clean fit. We have a lot of investors that think about their long money and their safe money as having a percentage of that in farmland for that region. So illiquidity is one. Two, it's not a high cash flow asset. Again, it's secure. You're not seeing huge variation in annual returns. It's not like you're getting 12% one year and nothing the next year and a capital call the next year. It's low, but consistent. So again, this isn't the place where you're looking for the highest coupon. This is the place where you're coming for that long-term capital preservation. The other thing to think about with farmland historically, and in large part, our business has been designed to help answer this question. But historically, I mean, farmland has been invested in for as long as farms have been around. To be very, very clear, there's been investment in United States farmland for hundreds of years. That
Mm.
said, it's typically been reserved for the very wealthy. So, if you Google it, there's a lot of very, very famous people, whether it be the founder of Jimmy John's or Bill Gates. There's several very, very wealthy individuals that own a lot of farmland.
Hmm.
Well, that's great. Fine. Good for them. But at the end of the day, how many of us have $2 million that we can just put away in an illiquid asset that we can't easily get to? Sure, it's
Yeah.
great capital preservation, but I'm
But
never going to be there, man. Like, it's just not me. I got
yeah,
kids
not me either. That
and I
ain't
don't have
me.
$2 million. So, yeah. So historically, it's been really hard to access. There's been institutional groups that have built really large funds, but that minimum is really, really high. And again, those people are attracting institutional investors. So they're looking for pension funds. They're looking for sovereign wealth funds. If I'm an individual sitting at my desk and I say, man, I have, everything into equities and bonds, and now I'm looking at alternatives. A lot of people get to us by looking at alternatives. Well, you start looking at alternatives, a lot of times when you begin digging into alts, you see crypto, you see, mixed bag products, you see art, you see sports investing, all of these, and that's fine. Those have a place in a portfolio. Those are traditionally and typically higher risk products. We kind of think it's funny that you talk about farmland as an alternative investment because we're way on the other side, right? I would say we are more conservative than even most equities. So
Right.
from our standpoint, when you think about what role this plays, right, most investors, the role that this playing in their portfolio is a safe place to put some money that they're looking for long-term growth and want to tie directly to agriculture and land itself. That minimum investment, we bring that way down. So our minimum investment is $15,000,
Okay.
right? A lot more people have 15,000 to invest than 2 million. And that's really, when you think about each business has a niche that makes it successful. I think our underwriting is phenomenal. Our ability to marry the investor value and what farmers need has been phenomenal. I believe that our value proposition is very strong and we're the best in the business to do what we do. At a really core level, what is unique about us from an access standpoint is that we are for almost everybody, right? We're a retail product. We are for all accredited United States citizens, legal residents, or US based entities. And that's what I think is kind of magical. And what I've loved about being a part of AcreTrader is I'm talking to people that are spending their own personal funds and they're just saying, no, I want some of my portfolio in this and I want to do it directly. Most people that invest with us are once removed from ag. Hey, my grandma had a farm. I loved going out there. I'd love to have a piece of my portfolio in that. And we've really tried to build our business to offer that in a way that I don't think is available otherwise.
Yeah, I think lowering that barrier to entry is a big part of the value that you bring to the industry because, like you said, there's a very small percentage of the world that has 200 liquid dollars to drop on, a parcel of land. So I think that's a really amazing thing. Besides the education that you bring to it, and all the data that you have backing the assets that you have in your portfolio. And you mentioned something I wanted to touch on with retirement investing. A lot of our investors are self-directed retirement investors, looking for that patient money that is really for the long term. I mean, that's with retirement accounts, those are funds that are locked up until you're 59 and a half anyways. So I think it does pair really well. And it is not something that you can invest in if you just have, a regular brokerage account or a brokerage IRA with the Schwab or a Fidelity or some other big brokerage or financial institution. You really do need not only a self-directed IRA, but a custodian that allows for alternative assets to be held by the IRA in general. So, yeah, I think that's really where you have this unique pairing where you have this money you need to put somewhere long term, and you have this asset that performs very well long term. Plus the positives of the ongoing that coupon that you mentioned. So I think that's really awesome. And yeah, for anybody who's wanting to learn more about Farmland, AcreTrader, where to get started, where would you recommend they go? Where can they find more, and where can they hear more from you? Give us all give us the tool belt that we need to get started.
Yeah, absolutely. So, I mean, obviously, acretrader.com is a great place to start. We are pride ourselves on we're all ag nerds. So we publish a lot of macro research that has nothing to do directly with our business. We want you to understand farmland. And to be blunt, it's because it's really important you know what you're getting into. I want people to come in wide eyed with what to honestly expect. We put every single result from every investment we've ever had on the platform in a PDF on the platform. You can see you can go through every single outcome for every single investor. You can also see an Excel model for every single investment on our platform. It's downloadable and it's breakable. You can go in and change. I mean, we swear by transparency. We're also a small business. So we have a phone number at the bottom and it's an 888 number. It goes to about 4 of our cell phones. I promise you somebody will pick up the phone. We pride ourselves on being accessible. Again, we've raised almost $500 million through the platform to date. We're a
That's
small
amazing.
company. Ultimately, there are 12 of us that are exclusively focused on AcreTrader itself here. When you think about access, I think it was really good when you talk about self-directed IRAs and the value and the marriage between that. My business is making sure that you have really easy access to this product. What's really nice is and folks like Safeguard, like what you're doing is you're giving access to use IRA funds the way that you want to. That's really, really important. That freedom of access is incredibly important to, I think, both of our businesses.
For sure.
And I think there's a really clean marriage there, right? The idea of I want to be able to invest the way I want to. That's hard to do today. It's hard in the structure, especially in retirement accounts. It's a hard thing to do. And there's a lot of regulation around custodial services and how you set it up. And is it actually self-directed, not only from a custodian standpoint, from a decision making and money movement standpoint. Again, that I think fits really well with our product. I'm also really thankful for y'all in your industry because I think it's providing more access. I think in a way, we're both trying to get people access to what they want. I want people to be able to spend their money the way they want, and to be able to invest in things that they may not have had access to 5 or 10 years ago.
Absolutely, yeah. Even if it's just, somebody understanding that this is an option, even if they don't, get in the car and drive the self-directed vehicle themselves, even if they know that that's an option that they have, I think that's incredibly valuable and something that we're really looking to just push on this podcast is just letting people know this is something you can do, and bringing the experts on to make it as easy and as seamless as possible to jump in the deep end and get started. So yeah, and like you mentioned as well, it's definitely that control, right? Having the ability to invest in what you want, but at the same time, it's having that ability to invest in what you want, but also having the structure to be able to do that on your own and not have to rely solely on a custodian. It's a great option for a lot of people to have a direct custody based self-directed account, but for a lot of industries and a lot of assets, it's actually more important to have the vehicle that you can drive yourself. And yeah, we're definitely all about making sure that people have that access, have that control and autonomy. Rob, thank you so much. This, I think, is the exact kind of conversation that we love, taking an asset class that most people have never even considered, making it understandable. Like you mentioned, anybody who's interested, you can check out AcreTrader and more about Rob's platform and his company at acretrader.com. Find that number, give him a call. I want to see if that number works. I definitely believe. I want to see if I win the lottery and get you on the line there. But yeah, go check out Rob. And again, thank you so much for being with us today, sharing your knowledge and your insights. Until next time, keep thinking independently, keep looking out where others aren't, and we'll see you on the next episode of Break Free from Wall Street. Thanks again, Rob.
Yeah, really appreciate you, Nick. Thanks so much.
Absolutely. We'll see you, everybody.